let's look at migration. So you have more than 39,000 people were searching to move to Florida. Far and away the most, right? Not even close. Then you go to Texas, 13,000. Pretty good, pretty solid. Arizona, 9,000. 7,000 Nevada. Then you go to Georgia, mild, 5,000. And you had a little bit in Alabama and a little bit in Mississippi. But Carolinas, which we've been talking about, Tennessee, Texas, and Florida. Those have been my primary drivers. I've also been looking at Michigan. We've been doing a bit in Michigan, and these are markets that we like a lot. And what markets do we tell you to stay away from? Obviously, the ones where people are moving from, California being the most, 41,000 people looking to move and leave California, which I totally understand. New York, second most, 23,000. New Jersey's got a bit. Pennsylvania's got some. You got a bit in Massachusetts, and you've got Illinois. People are looking to move out. And Indiana people as well, even though Indiana is a good market. Ohio, Indiana, I like these markets like Michigan, Wisconsin, solid. But people are looking to go to the Sun Belt, which are these states down here, where it's warmer climates, better weather, more jobs, more opportunity, more freedom. So that's where people are looking at. Now let's get into numbers. And this is, I'm going to give you some numbers from Florida, right? We got the median sales price of $389,700. It's up basically 5% from last year, February of last year, which people would tell you the Florida market's crashing. Look all over YouTube. You're going to find people tell you the Florida market. It's not crashing. It's not. And it's not going to crash when you look at that heat map and you look at where people are looking to move up to and where they're looking to move from. This is really not rocket science. And all these people putting out the Florida market's crashing. Look, it's all clickbait to get you guys to sit there and look at their data and look at their info and, keep up getting subscribers. Here, I'm not getting subscribers at that amount because I'm giving you real data. And real data is not sexy. And it is not, the facts are not sexy, right? So it's not driving people to come look at what I got here. But my data, I'm going to give you honest data, and it'll grow. My channel will grow naturally as people see that the data I'm giving you is real, and the message I'm trying to send to you is where to invest, where not to invest. I'm trying to help everybody out. I don't want to be a fear monger, and I don't want to tell you this is great when it's not. Florida is good. It's going to eventually turn, and it's going to eventually go negatively, but that's after the baby boomers retired, moved down here. That's after people have been able to sell their property and move down here that want to, because whether it's the weather or politics or whatever the reason may be. But just follow the data. The data is simple. 5% year over year. And the reason I find that number staggeringly high is because interest rates last year were 3%. 2.75 to 3.25 during this time of year, compared to almost 7% up to this past week. Now that we've had the bank collapses, the great thing is mortgage rates have dropped nearly half a point this past week, getting back to 6.5% or a little bit lower. I expect them to continue and potentially get into the fives here in the short term, again, spurring that buying frenzy. I've been talking about this short-term buying frenzy here as we get to the spring and the early summer, before I expect that to shift later in the summer and into fall and totally shift. In 24, it might be a whole different story. It might be a whole different ballgame. I don't know where rates are going to be. I don't know what the heat maps are going to look like, but I'm going to keep my eyes on a trend and keep you guys updated as what's going on. But this is important data to look at here. And if you look at the hottest markets, again, they're going to be dominated. If you look at now this one is all Florida, but when I pull up other maps, they're going to be dominated by Florida. I think if you look at the top 10 fastest growing sales in the country right now, 5 of the 10 are in Florida. And that's been happening over the past 3 years. That's going to continue for a little while. And before eventually shifting, if Florida continues to get overpriced, and as the baby boomers move down here, and if rates go down to where people want, people are able to sell and move, and then you have that migration shift, or at least slow down in the shift. So we will see where that goes. Now, Let's share another article here. Oops. All right, now let's talk about what Zillow has. And this is interesting. So Zillow has U.S. homes climbed slightly from January to February. Kind of surprising again, because mortgage rates have been rising during that time period. But what it tells me is there's pent up demand. And the fact that prices are going up is still pretty impressive. The home values are 4.4% higher than a year ago, but 4% lower from the peak last July. I know we had like 6 straight months, as it says here, of declines before we've shifted that and are trending in the right direction. A lot of this is just seasonal, right? It usually does decline after July, the market. Things slow down. People are buying before the school years, which starts in either August or September. So people are generally buying during that time period, especially families. And we have very low inventory, not record low like last year, but very low. And it's continuing to downtick. Even this time of year when it normally should be going up, it's still trending in a downward direction. We'll see how many more weeks this happens. But great article I read that there's a lot of accidental landlords now. People who have 3% mortgage rates who do want to move end up just renting their properties out, and they're buying other properties. Again, they have a cash flow rental. That's cheap, right? 3% debt, and they're probably going to cash flow rent that property. So now they're keeping those properties, which is again keeping the inventory down. It's going to keep pushing that down. So again, trends that are continuing, and that's why I just don't see a crash. Definitely not a nationwide crash. It will be areas, and there are already areas where it did crash, like San Francisco crashed, had a big drop, and Boise, Idaho had a drop, and there's different markets in Texas that had some drops, but most of Texas has really, really been strong. And we're going to see that continue. Good jobs down in Texas, job growth in Tennessee, job growth in Alabama, Georgia, Florida, in these, and Nevada, and these different states that have high jobs or high amount of employment. You're going to have high demand for people to go there. And people also are moving because they can work virtually. So when you can work virtually, why not move where you want to move? So that's going to continue for at least another year, I'd say maybe 2, before that slows down a little bit. And if you look at Zillow has their home index value here, I guess, and Miami's been the highest or one of the highest for a long time now. Very interesting here, data here. And let's see what else we got here. I'm going to switch tabs here. Here we go. So now we've got the homes on the market. The newly listed prices are $389,000. Sellers are smart, and the realtors have led them in the right direction. They've dropped the price from a year ago. We don't have that buying frenzy to the same extent we had a year ago. We had really low, near record low rates. And we also had extraordinary record low inventory. So people are pricing them more appropriately. And the days on the market's up a little bit, 27% over last year, but that's simply rate driven. And we have 3 months supply, which is nowhere near healthy. We need at least 6 to 7 months supply to be healthy, and we're nowhere near that. Our inventory is very, very low. Not quite to lows of 22, early in 22, but definitely 21 here. We are at the 21 level, February 21. And that's kind of when this frenzy started to really take place in the 22. And again, I anticipate a little bit here in the 23. So very interesting data here. 23.6% of homes are still selling above the listing price. Again, people are pricing them properly. The good homes are being sold above list. Homes with price drops, 14.2%. That's dropping. That's actually fairly low, but it's up 8.6% from last year. And the sale to listing price, almost ask, right? 98.2% of ask on average. This had been near 100 or a little over 100 last year ago. And then it dropped and tailed down, but still very, very close to asking price where housing is going. Let's see. This doesn't have that data. The 10. Okay, here's the top 10 areas people are moving to. Again, you're going to see a lot of Sun Belt here and where they're moving from. where this is where jobs are being bled, and this is where jobs are going. This is pretty basic. It's very basic. So it's a basic supply demand factor, what we got going on here. So the data will tell you a lot. Now let's look at some other data here and look at investor market share, because this is one thing that I follow. If you're an investor, you want to follow this. So look at this straight down action here. This was COVID 2020, right? This is around March into July, I would say, of 2020, or at least in June. And this is when investors stopped buying, stopped marketing. And this is when I picked up a bunch of properties, ended up being the best thing I ever did. Didn't know whether it was going to work out or not. Sure as heck did. Look at this. Investor activity shot up. Mortgage rates increase. Investor activity explodes down. And now look what we got again. Investor activity starting to take off again. Now we're picking up things at great prices. If this continues, those great prices won't be there anymore. But what I've done is really had a huge influx over the last 3 months of properties, planning here for a really healthy spring market that I've been trying to tell everybody here that listens to this channel about. So that's what I'm doing right now. And these charts will tell you a lot. It's like looking at stocks or looking at crypto charts. It's what this is going to tell you what investors are doing. And then the investors got really happy in 2021, early 2022, and then rates shot up, and then they panicked, came down. Now they see buyers out there still buying, and now they're starting to buy again. I bet this is going to continue out like this. This line will go out somewhere like this, not necessarily straight up, right? It's going to kind of continue in a good direction here, which will work out well if you do have properties on the market. I have a bunch of properties on the market, and I plan on getting some pretty good profits from a lot of these sales here in the spring and into the summer. I'm going to take a really good hard look at the end of Q2, really look at the numbers, let the numbers tell me what I'm doing Q3 and Q4, whether I really need to pull back or whether I need to hit the accelerator and continue even more. I'm anticipating a pullback, but we will see. We will see what the market tells us, and we will see what the interest rates are, and we'll see what the inventory level is. Because if inventory continues to stay low, I'm going to continue to buy, because there's going to be a strong floor of pricing, because there's very limited supply and there will always be buyers. So there's going to be opportunities. Remember that, keep that in mind, and we will catch you on the next video.